Ladies and gentlemen, do my eyes deceive me? It's something I can't believe that has happened. We're talking about a positive reaction to an earnings report. In this bear market, you're telling me that we see a positive reaction to an earnings report. This is a shocking development, folks. We're talking about Microsoft stock today. Just reported earnings in the after hours. We're going to be talking about it today and seeing what's going on with this stock. But we love to see it. 4.5% after hours gain after a little bit of a shaky start. I mean, we started off pretty negative, all things considered. I mean, we're talking around 2% decline in the early parts of the after hours. And then we see positivity, folks. We never see positivity. So good to see. Because as I mentioned in my earnings to watch video, this big tech earnings cycle is massive for really the course of the market over the next couple months. I think this is essential. If we see solid reports, we could potentially see good returns out of the NASDAQ after getting schmammered on the year. I mean, the NASDAQ is down massively. These tech companies are getting hammered. All of them are. There's not really many that are spared at this point. You look at Microsoft stock and you see the story. Down 19% year to date. Very solid company. Down pretty massively, and we're talking over the last year. Microsoft has now only gained 3%. Only 3%. Obviously, great gains the last 5 years. 300% nearly. If you include the after hours movement, 300% gains in the last 5 years still. But it has been a very rough year. So some may say that's just leveling out, right? This is something that's due to happen. And you may have a point there. But let's just take that into consideration. We'll get into this earnings report, okay? So I'm going to preface this by saying this is an absolute BS lie here by Seeking Alpha. Terrible job. Gaurav Batavia, look, you should not have a job here anymore. These numbers are 100% inaccurate. So the real numbers we're looking for would be a GAAP EPS line of $2.22. Now that compares to a $2.19 analyst estimate. So really this company beat by 3 cents on a GAAP perspective. Relatively tight, but obviously it's not a miss like this. This miss is misleading because it's 100% accurate. I don't know where this number's coming from. I believe it's Q1 2019 numbers, or 2021 I should say. 2019, I really have phased out the last 3 years from all existence. I wish I had, because it's worth doing. But this is a blatant lie, right? They beat it on a profitability standpoint. They did. And from a revenue perspective, this is a number I like quite a bit. $49.4 billion, up 18.5% year over year. Beats by $350 million. This is not a shocker. I think if I recall, I thought they were going to do $49.5 billion. So I was pretty close. It was definitely above estimates in that perspective, but I was pretty close, but I did not quite hit the nail on the head. I apologize if I were, I apologize if you were banking on me being right. Now, the stock still did go up, baby. So how about that? If you bought call options for this earnings, I hope you're happy, because I gave you the keys to the kingdom here, folks. I gave you the keys to the kingdom. But yeah, that's the data there. We'll look a little bit more in depth into the actual by segment category. This was mostly led by cloud gains, which is very nice. A massively growing segment for them consistently. But let's look at the press release and find a little greater data. 18% growth year over year. Obviously, we saw that. Love it. Operating income came in at $20.4 billion, which increased 19%. Net income. This is a line that I love out of Microsoft. What they're able to do. Satya Nadella does great things as CEO. He's really doing a great job here. In terms of operations, I mean, you can see the operations are running pretty smoothly at a company like Google when you see a net income line of $16.7 billion off of a revenue of only $49.4 billion. So, I mean, pretty well what you're telling me is 1/3 of your revenue is net income. That's pretty significant. That's a pretty darn significant line right there. That is in the territory where I consider this company to be printing money. They increased 8% on a GAAP perspective year over year. Yeah, I mean, I consider them This is a money printer right here. When you're looking at a comparison between this $16.7 billion of net income based off of a $49.4 billion revenue line, that's a money printer. That's what I like to call money printer. And this, unlike the Fed, this money is not completely fake. This is real money they've earned. So now the Fed devalues this money because they're scumbags, but let's get into that another day, okay? Can't say that, I don't think. I don't think you're allowed to say that. Revenue and diluted EPS results included a negative $302 million and only really the equivalent of 3 cents, so not really massive here. Additional impact from unfavorable foreign exchange rate movement within the quarter, not really significant, but it also included 1 cent from nuance. Yeah, I mean that's 4 cents that changed, but regardless, they still beat by 3 cents on analyst estimates. What they're saying is they could have beat by 7, but that's okay. We'll accept that. It's really exciting. I mean, you see great results there. We will now look at some other goodies, right? Yeah, I like to look at other goodies from a revenue perspective. Beautiful stuff here. This is last year's a $41.7 billion line on a GAAP perspective versus, look at this, $49.3 this year. The net income line, you see where the growth is, $16.7 billion compared to a $15.4. Now you may say, look, the percentage of net income to revenue is a little bit lesser actually, and I think you're right in that perspective, right? You are correct. Before it was closer to let's say 40% of their revenue came in as net income. Now it's closer to 33%. So there is stuff to say there, but the EPS growing, it's a beautiful line. It's a beautiful line. It really is. I like to see it. Let's look at the business highlights. These are some things I like to look at for sure. When you look at specific segments, productivity and business processes segment up 17, as you can see here. Office commercial products and cloud services up 12. This obviously includes Office 365, which is really good to see from a commercial standpoint, them growing that perspective. Because you look at the Office 365 platform, and you don't really think about how many users they could potentially grow there and how they can grow that revenue, right? You think it's a long-standing thing, so it's kind of hard to grow that line. Sorry, had to do that. Sometimes you got to throw some stuff, but yeah, I mean, it's crazy to see they're still continuing to grow that, and it's really exciting to see that, obviously, from a commercial standpoint, as more businesses are using Office 365. I think it's an essential tool. I mean, it really is. They pretty well, I mean, I hate to say they're a monopoly in that aspect, but they have the best service out there. Sorry, Google. You don't Google Docs and Google Drive has really nothing on Microsoft Office, the Office suite, unfortunately. It doesn't. But it's a good alternative. It is, especially for free. There's no doubt about that. Office consumer products and cloud services was up 11, and Microsoft 365 consumer subscribers grew to 58.4 million. This is a line I really like too. LinkedIn revenue increasing 34%. This is one that I actually think is a very significant line that people don't consider out. With the owning of LinkedIn, this is really a service that hasn't necessarily been fleshed out in terms of what it can do fully on an advertising scale. I think there's a lot of revenue potential out of LinkedIn when we look at an ad perspective and just overall user growth. I think LinkedIn is a great platform, especially given a jobs market that is relatively crappy. As people eventually people are going to have to go back to work eventually. I don't know how people aren't. I mean, we're talking about people just not being in the jobs market. I mean, I don't know how they can do that, but here they are. Eventually they'll have to go back to work. I mean, there's 11 million jobs or something out there. Someone's got to fill these jobs at some point, and LinkedIn is a fantastic source for that. As they grow more users, they're able to grow really that overall revenue line on LinkedIn. I like to see that, and I think this is actually a pretty decent segment for them in the future. Intelligent Cloud here, obviously their main segment right now grew 26%, and why is that? Because Microsoft Azure, that is the their main cloud platform, grew 46%. Very significant. This is a company and really a segment that's been growing 50, or really a service, I guess I should say, specific product from them that has been growing 40 plus percent consistently, really 50 plus percent consistently, right around that line for quarter on quarter on quarter on quarter. It's incredible. And you'll see the percentage drop, but we're talking about from a dollar perspective, they're actually increasing it consistently by even larger amounts quarter over quarter. So the percentage goes down. That's just because the overall revenue they're up against is higher, right? So you'd have to increase by significantly even more exponentially to keep that percentage the same. So keep that in consideration. From a more personal computing standpoint, pretty impressed with this, actually, an 11% growth there. This is more of a segment that includes kind of consumers like you and I, and not the commercial aspect of it. So Windows OEM up 11, Windows commercial products and cloud services up 14. Xbox and content revenue increased 4%. This is a line that shocks me quite incredibly, as overall, this is a tough industry right now when you're looking at a video game standpoint based off of incredibly growing 2 years, the last 2 years, right? 2020 and 2021 were significant for the gaming industry, and revenue is massively growing over those 2 years. It's tough. I'm shocked that this is actually an increase. Just being 100% honest, I'm incredibly shocked that that's an increase. But you saw Activision Blizzard hitting the same kind of wall. It's tough right now to show comps year over year. It really is. So I'm pretty impressed with Microsoft able to do that. And obviously they're a little different than Activision Blizzard, where they're more of a game manufacturer. Obviously this is a company that Microsoft here has Xbox and the entire platform itself, so it's a little bit different. So there's a lot of other avenues to really grow from a revenue perspective. It could just be including apps as well as all transactions done. So that is one thing to consider, but still, it's a tough industry. Search and news advertising revenue up 23, nice, and Surface revenue up 13. I really do like that as well. To see the Surface tablet revenue up 13 is pretty significant, right? This is a big segment for them. Kind of helping to develop the ecosystem for them. The more product they have out there by Microsoft, the better that helps them, right? The better it helps them. So pretty significant, and I like to see that from them. So here it shows that they returned $12.4 billion to shareholders in the share of repurchases and dividends in the third quarter. That is quite significant. 25% increase compared to the third quarter of last year. That is really wild. Shoot. I'm going to look at the page here because it says they're going to announce the guidance with the call. I didn't look ahead of time, but I'm assuming this will be an update on the call. Yes, it will be. So the fact that you can see this turnaround in the stock in the after hours means this is when the earnings call started, and you can see the reaction from it. 4.5% up, so pretty significant. So let's look at this data. Let's see. Digital technology is key input that fuels the. Okay, we get that, folks. We get that. We understand what they reported. When asked about the PC, he believes in the durability of the Windows business. That's great. Where's the? Oh, you know what? This is dirty for them. Look, they're not talking about it. I don't have an update here. Sorry, folks. Once I get that update, you're going to know about it. And I'm going to know about this guidance, but I can clearly tell the guidance is what bumped this thing up. Even though there are great results, you'll never know. You never know. What else can we see here? Well, from a segment perspective, it's good to see this year over year too. Obviously, we know the percentages because we just looked at them. But obviously, growth in every segment. The largest here is obviously going to be the Intelligent Cloud segment. Grew $4 billion year over year, pretty significant. $2 billion over in the productivity and business processes, and more personal computing up $1.5 billion. I like to see it. Look, it's great stuff. From specific products, obviously LinkedIn is a big winner there. Azure up 46. Dynamics 365. You see every single product grew. Every single segment. That's pretty significant. if you're a shareholder. Look, I'm pretty excited about that. We're going to look at the balance sheet first, then we're going to talk about this stock, what we're going to do right now. Total current assets on this company right now. This is a comparison of 9 months, so one thing to consider. 9 months comparison. 153.9 billion in total current assets compared to 184.4 billion. That is quite the decline there. My presumption is that cash was used to not only benefit shareholders in the form of repurchase, but I would also presume they paid off some of their short-term liabilities in that aspect. From a total asset standpoint, this actually grew 344 compared to 333 of 9 months ago. So quite a significant growth there, $11 billion of growth. Most of it you can see here, this goodwill line grew quite a bit. Property grew quite a bit as well. Really every segment grew quite a bit. Intangible assets grew quite a bit, and other long-term assets grew as well. So pretty nice to see that. From a liability standpoint, what a shocker. Total current liabilities did fall 77.4 compared to 88.6 of 9 months ago. So they shrank that $11 billion. So that's pretty nice. I mean, that's pretty nice to see that this short-term unearned revenue, I guess, is what really declined there. But from a total liability standpoint, 181 compared to 191, you see an overall decline there. The long-term debt line didn't shrink much, about $2 billion, but it's not really a massive line for them when you look in the grand scheme. So shareholder equity sitting at 162 compared to 141. Just in 9 months, a $20 billion increase in equity is quite significant. I like it a lot. Look, we look at Microsoft, and this is somehow a company still staying over that $2 trillion market cap, despite all of the negativity this year. This is a fantastic company, and if you look from a full year standpoint, this company is going to revenue around $200 billion this year. That is pretty significant. And trading at a PE ratio, even after this, it's going to be under 30 still. It's not overly expensive, but given the market's downturn, some might consider it expensive, right? I still don't. I think Microsoft, despite this, I think it's a great buy at these levels. I really do. When you look at the year-to-date line, 19% downward movement. This is a company that's still growing on every segment, even when they shouldn't be growing. Some of them, Xbox should not have grown, right? They still grew, folks. This is a company I love. 5 to 10 years down the road, if you buy Microsoft at these levels, you're going to be happy when this stock has easily doubled in price. That's what I got for you. I hope you have a great stinking day.